Hey, welcome to the Explainer. So, if you've ever even thought about getting into trading, you have absolutely heard that one statistic. You know the one that kind of haunts everyone. Today, we're not just going to look at that number. We're going to tear it apart and figure out what is really going on behind the scenes. And there it is, 90%. And let me tell you, our research shows this isn't some made-up scare tactic. The overwhelming majority of people who give trading a shot, well, they lose money. It's a really tough number to look at, I get it. But understanding why that happens is the first real step to ending up on the right side of it. So that's the real question, isn't it? What's the magic trick? What does that top 10% know that everyone else doesn't? Is it some kind of secret formula or a super complex algorithm? Well, as we're about to see, the answer is usually a lot simpler and a lot closer to home than you think. So here's our game plan. First, we'll face the reality of that 90% number. Then, we're going to dive deep into the three biggest reasons why it exists: the psychology trap, the risk management blind spot, and finally, the illusion that it's all about strategy. Okay, let's just get this out of the way right now. This is a hard truth. Most people who fail think the problem is that they haven't found the right strategy yet. But honestly, the pros will tell you that's almost never the real issue. The trading game is won or lost based on how you execute and, even more importantly, what's going on in your head. All right, let's get right into what is by far the single biggest reason people fail. All the experts agree on this one. The most difficult battle you'll ever fight isn't with the market, it's the one that's happening right between your own ears. This is where the 90% lose the war, and honestly, it's often before they even place their first trade. And this quote just says it all, doesn't it? You can have the most brilliant, back-tested trading plan in the world, but the second your emotions take the wheel, that plan is completely worthless. The failure isn't in your strategy. It's in that moment you lose control because real money is on the line. This right here frames that internal struggle perfectly. It's really just a battle between discipline and dopamine. Failing traders are basically adrenaline junkies. They're chasing the thrill, that hit of excitement that comes from being in the action, instead of doing the boring, patient, disciplined work of just waiting for a high-quality trade that actually fits their plan. And all that dopamine seeking leads to these classic, predictable mistakes. There's action bias, which tricks you into feeling like you have to be busy, you always have to be in a trade. There's impatience, which makes you quit a perfectly good strategy right before it's about to pay off. And then, of course, the big ones, letting fear and greed call the shots, or seeing someone brag on social media and feeling pressure to make a move. It's a guaranteed recipe for failure. Okay, so that leads us directly to the second pillar of failure: risk management. If psychology is the arts of trading, then this part is the cold, hard math. And let me be clear, ignoring the math is basically financial suicide. This is such a critical mindset shift. See, amateurs try to avoid losing at all costs. Professionals, on the other hand, they plan for losses. They know losses are going to happen. It's just a cost of doing business. Their main goal isn't to be right all the time. It's to protect their money so they can survive a bad streak and stay in the game long enough for their winning strategy to actually work. I mean, this slide lays out exactly how an account gets blown up. And it's a story that almost every trader will recognize. It's so simple. You find that perfect trade setup, your emotions kick in, and you tell yourself, I'll just risk a little more on this one. And all it takes is for that one trade to go wrong to completely wipe out weeks or even months of your disciplined gains. And here's another huge trap: misusing leverage. Just think of leverage as borrowing money to make a much bigger bet. Yeah, it can amplify your wins, which sounds great, but it also amplifies your losses catastrophically. Beginners get tempted by it, they use way too much, and they turn what should have been a small, manageable loss into a complete account-ending disaster. And finally, let's talk about strategy. Now, this is where most traders start their journey, but it's also where so many of them get completely lost. There's this powerful illusion out there that a more complicated strategy, with more indicators and lines, must be a better one. But as we're about to see, it's usually the exact opposite. So this is a really important difference. Are you actually doing analysis, or are you just decorating? Real analysis gives you a very clear if this, then that plan. It tells you exactly where to get in and, more importantly, where you're wrong and need to get out. Decoration, on the other hand, is just cluttering up your chart with a bunch of stuff to make you feel like you're in control. It's not about planning. It's about justifying emotional decisions after the fact. And these are the strategic traps that catch almost everyone. You've got shiny object syndrome, where you're constantly jumping from one holy grail system to the next. You've got liquidity traps, where you follow the herd right into a trade, which is usually exactly where the big institutions are waiting to take the other side. And maybe the biggest one, no accountability. If you're not keeping a journal and reviewing your trades like a business, you're just doomed to repeat the same mistakes over and over again. So when you start connecting all these dots, it becomes pretty obvious, right? This endless hunt for a secret, perfect strategy, it's really just a distraction. People don't fail because they're missing some secret piece of information. They fail because they haven't mastered themselves. This table really just puts it all side by side. On one side, you have the failing trader. They're driven by emotion, they have terrible risk management, and they're always chasing the next new thing, which just leads to burnout. And on the other side, you have the professional. They're operating on a totally different level. Their entire foundation is built on discipline, preserving your capital, and mastering one system. They're playing a fundamentally different game. So we'll leave you with this final question because it really gets to the absolute heart of everything we've talked about. Before you go searching for a new indicator or a new system, you have to ask yourself this: is my strategy failing, or am I failing my strategy? The answer to that question almost always is the difference between the 90% and the 10%.